Ever wondered where the money actually comes from when you take out a loan through a platform like LendKey? It's a valid question. We often focus on the convenience, the rates, and the repayment terms, but the financial institutions backing these loans often remain in the background. Today, we're pulling back the curtain and diving deep into LendKey's lending partners. Before we get into the specifics, it's important to understand LendKey's role in the lending process. They're not actually a direct lender in the traditional sense. Think of them as a bridge connecting borrowers like you and me with a network of credit unions and banks. They provide the technology, the marketing, and the servicing platform, streamlining the entire loan application and management process. This model benefits everyone involved. Borrowers gain access to competitive rates and a user-friendly experience, while smaller financial institutions can expand their reach and diversify their loan portfolios without the heavy lifting of building their own online lending infrastructure. So, if LendKey isn't directly funding the loans, who is? The answer is a consortium of community banks and credit unions across the United States. These institutions are the actual originators and funders of the loans facilitated through the LendKey platform. This is a crucial distinction. It means your loan isn't coming from some faceless, multinational corporation. It's coming from institutions often deeply rooted in local communities. Now, LendKey doesn't publicly disclose a complete, up-to-the-minute list of all its lending partners. This is often due to strategic reasons and evolving partnerships. However, we can talk about the types of institutions they typically work with and why this model is beneficial. The primary partners are credit unions. Credit unions are member-owned, not-for-profit financial cooperatives. This structure allows them to often offer more competitive interest rates and lower fees compared to traditional banks. They prioritize serving their members' financial needs rather than maximizing profits for shareholders. This makes them ideal partners for a platform focused on providing affordable lending options. Think about it. A credit union in, say, rural Iowa, might have excellent loan products but limited reach beyond its local area. By partnering with LendKey, they can offer their loans to borrowers nationwide, significantly expanding their potential customer base. This is a win-win situation. In addition to credit unions, LendKey also partners with community banks. These are smaller, locally focused banks that prioritize personalized service and building relationships with their customers. Like credit unions, they often offer competitive rates and are deeply invested in the economic well-being of the communities they serve. The partnership with LendKey allows these community banks to compete with larger national banks in the online lending space. They gain access to cutting-edge technology and a wider audience without having to invest heavily in developing their own online platforms. This levels the playing field, providing borrowers with more choices and potentially better terms. Now, you might be wondering why this matters to you as a borrower. Why should you care if your loan comes from a credit union in Ohio or a community bank in Texas? There are several key reasons. First, as we've already touched on, credit unions and community banks are often able to offer more competitive interest rates and lower fees. This can translate to significant savings over the life of your loan. Second, these institutions are often more flexible and willing to work with borrowers on an individual basis. They tend to have a more personalized approach to lending, taking into account factors beyond just your credit score. This can be especially beneficial for borrowers with unique financial circumstances. Third, by choosing a loan facilitated through LendKey, you're often supporting smaller, community-focused financial institutions. This helps to strengthen local economies and promotes a more diverse and competitive lending landscape. Let's talk about the types of loans LendKey facilitates through these partnerships. They cover a range of lending products, including private student loans, student loan refinancing, and home improvement loans. Each of these loan types can be offered by different partners within the LendKey network, depending on their specific lending focus and expertise. It's important to understand that the specific terms and conditions of your loan, including the interest rate, repayment schedule, and any associated fees, will be determined by the individual lending partner that originates your loan. LendKey provides the platform and facilitates the process, but the ultimate lending decision and the specific loan terms are set by the partner institution. This is why it's crucial to carefully review all loan documents and disclosures before signing anything. Pay close attention to the name of the lender, the interest rate, the repayment terms, and any applicable fees. This information will be clearly outlined in the loan agreement. So, to recap, LendKey partners with a network of credit unions and community banks across the United States to offer a variety of loan products. These institutions are the actual funders of the loans, while LendKey provides the technology and platform that connects borrowers and lenders. This model benefits both borrowers and lenders, providing access to competitive rates, a streamlined lending experience, and support for smaller, community-focused financial institutions. While LendKey doesn't publish a full list of partners, understanding the types of institutions they work with gives you a solid understanding of where the funding comes from. It's not a big, faceless corporation, but rather a network of credit unions and community banks often deeply rooted in the communities they serve. This is a key differentiator and a significant advantage for borrowers seeking personalized service and competitive loan terms. With that said, thanks for watching, and until next time.